Alright, Security Analysis, Chapter 10. Security Exchange Act of 1934, Section 13, requires the corporation to issue the security for the public financial statement of the Commission annually, statement of the furniture of the stockholder of the purchase shortly after the end of the business year. The corporation may use the determine a 12-month period, therefore may have its year end in any given month. The reporting year ending in December is called the calendar year, while one ending in a month is referred to as the official year. Basic knowledge component of the corporate financial statement is required. All of the professional investment industry are studied with the topics combined with the general information is needed. With a more detailed study would be necessary with the candidates pursuing careers in security analysis, corporate finance, and similar areas. Financial statement. The corporation issues two types of financial statement: the balance sheet with the income and the rating and earnings statement. The balance sheet with the addition corporation given the point of time, and thus the balance sheet with the Acme Furniture Manufacturing Corporation, December 31st, 2016, which show the asset things value held by the corporation over the date of the assets would be shown on the left side with the balance. On the right side with the balance sheet would be with the liabilities amounts to be paid over the corporation. Assets should be exceeded with the liabilities. Right side will also show the stockholder equity with the net worth of the corporation. This is the amount which was the assets exceed the liability, represent the value of the owner stockholder. Interest left side would equal the value of the right side of the lenders. Hence the name of the overall picture of the give the balance sheet equation. Total assets equal total liabilities plus stockholder equity. Total assets, total liability, stockholder equity. Balance sheet, the asset of the corporation, asset of the balance sheets, are divided in three categories: current assets, fixed assets, intangible assets. Current asset of the converted to cash in 1 year or less. Among such items would be cash itself, the considered the current market securities or industry sales security for the usual manner, regular way, settled in 3 business days. For sale of U.S. government securities, made regular settlement would be much of the sooner, only 1 business day. As certain meets the 1 year or less test, marketable securities or current access due rapidity with which securities can be sold. They also are considered to be much cash equivalents, so should have the term cash equivalents arise, refer to actual cash market securities shown as assets on the balance account receivable. These are amounts due to the client will have been purchased with the corporation process. We're currently hoping will pay their bills with the year so the accounts receivable. The current asset of our business experience that may have to start with a certain percentage of the thus received and never paid with any of the numbers of reasons. Death, bankruptcy, etc. We therefore may reduce receivable amounts recalled by reserved doubtful accounts. Inventories of the corporation include the furnished goods that are ready for the sale, as well as work in progress. Materials on hand will be given the company products. As the rule of thumb, manufacturing corporations should turn over the inventory between 5 and 6 times each year. Certain qualities inventories, current access assets that can be converted to cash in 1 year or less. Inventories, usually the largest current asset of the manufacturing company. They are, however, subject to the question: should cash be need rapidly to meet the emergency, perhaps the seasonal nature of the goods not be sold, but would have to be sold with a sacrifice price that will not reflect their true value. For that reason, we will later test the company balance sheet, remove the inventory from the current asset, but the result will be quick assets or current assets minus inventory. Let's begin with the construction balance sheet of the hypothetical company, Acme Furniture Manufacturing Corporation. Current access, cash, marketable securities, account receivable, less than reserved, doubtful accounts, inventories, total current access, current liabilities, long-term liabilities, fixed assets, intangible assets, stockholder equity. Fixed asset. These assets are held with use for the investment, not for sale over the near term of the use. Fixed asset, landing, building, machinery, furniture, fixture. Fixed assets other than land, amortized over the life of the time. Amortization, simply written down with the value of the capital expenditure asset with 3 types of amortization. Depreciation, amount of written due off the expected wearing of the building, machinery, furniture, and fixtures. The depreciation take each year with a pre-tax deduction, corporation income tax that result with a meaningful tax savings. Depletion, loss of the rising waste away of the natural resource, such as the coal mining oil well. The depletion is also a tax deduction for the corporation. Of the obsolescence of form of organization caused by the change of the technology, which some builds better mousetraps, ours may become obsolete. Intangible assets. These are assets which are true value cannot be assigned, but they may have greater worth or may produce the income for the corporation value. If not determinable, for example, the trademark intangible asset, the trademark Coke, Kleenex are certain valuable tools for product sale. The value of the dollar value would be impossible to determine whether the label them in intangibles. Other intangibles would be copyrights, goodwills, and patents. Current access market securities account receivable, less reserved, doubtful inventories, tax return. total current assets, current liabilities, long-term liability, fixed assets, land, building, machinery, furniture, fixtures, lease, accumulated depreciation, next fixed assets, stockholder equity, net worth, intangible assets, patent, trademark, total assets. We have now completed the asset side of the balance sheet. Let's move over to the right-hand side. Liabilities, current liabilities. These include all the time items that have to do with the payment of 1 year. For example, the wages, our wages, loan payment, the business expense, the account payable, the supplication tax, the security due within a year of the interest, the debt paid and payable in a year of the police. No, the interest obligation of the corporation is the liability. Fair to pay the cause of the holder of the debt, instruments of worth, liquidation, dividends of the stock. However, they're not required to pay, represent, reward stockholders. Not on an obligation that becomes the current liability only over the time they are declared by the corporation until the time when they actually paid. Long-term liabilities consist of the outstanding bonds issued by the corporation, not including, of course, of the due of the 1 year's long in which on the current liabilities. Another look at the balance sheet with the current longer-term liabilities added. Stockholders' equity would detail the assets and liability of our corporation, amount of which the assets exceed the liability. Stockholder equity, net worth. You can put in a personal and financial situation in the same type to add up the assets of the house, car, bank account, securities, furniture, etc. Subject to liabilities, mortgage on the house, car, loan, credit balance, etc. The difference is what you are worth. Corporations may have the number of types of stock outstanding. Let us assume that offered preferred stock and common stock with the preferred stock is carried out of the balance stated. She's stated in par value 100,000 shares at $10 per preferred would be $1 million. Total common stock, also called at a par, given the same number of the shares, par value, 100,000 shares at $10 par. Common would also carry $1 million stock. However, all other items balance sheets below the stated value of the common stock are considered the part of the total value of the issue. These two such items could be listed with the retained earnings and capital surplus. Retained earnings, also known as earned surplus, amount of money earned over the previous business, the history of the effect of each year of the added our balance sheet. The amount of the bottom line should be profit of $150,000 from the operation would have the added amount with the current asset of the cash to make the compensation entry of the right side would add $150,000 retained earnings. So the total would change the each year business experiences recorded. Retained earnings useful in making the sheet balance of the entries being recorded would seem indicated otherwise. For suppose the company issued a $1 million additional long-term debenture, it would be unusual to have the bond price of the premium offer over face value. Therefore, $1 million issue might produce $1,100,000 proceeds for the corporation. That could be because the interest rate of the bonds being higher than current market price requirements. Let's show how the result of the bonds issued on the balance sheet. Balance have achieved. Should the bond result of the corporation receiving a discount with the face value, they would charge the retained earning. For example, the $1 million bond sold for the proceeds of the $900,000 would reflect as $1,000 minus retained earnings. Balance has achieved. The retained earnings are also used to attain balance for the corporation stock of the division dividend. Unlike stock split, you must make a balance sheet adjustment with the stock divided dividends paid. Suppose your corporation splits its stock 2-for-1, that would result in or having 200,000 shares outstanding rather than the previous 100,000 shares. However, with a stock split, you would inversely change the par value, resulting in no change in the stated balance sheet value. Let's look at our balance sheet after the split. 400,000 shares of common stock at $10 par, $1 million. Before 200,000 shares of common stock at $5 par, $1 million. In reverse split, the number of shares is decreased 1-for-2 split. In this case, the par value would increase proportionally to produce the needed result. When the stock dividends are paid with the par value of the stock remains unchanged, if the trade corporation pay 100% of the stock dividend resulted in a new total of the 200,000 shares of the $10 par stock. $2 million total stated value. Here again, we would retain earnings, achieve balance, reducing an amount equal to the increased stated value of the stock. Let's try in before-after experimentation again. Before 100,000 shares of common stock at $10 par, rated earnings total $4.1 million. 200,000 shares of stock common at $10 par, rated earnings at $2,010,000. Total $44.1 million. Capital surplus, also known as paid in capital, that represents the amount of the company received in the stock, excess of the par value, with noted for the par value, new common stock, and weighted, no reflective of the value of the marketplace. The corporation may sell additional stock to the public prior to above its par value. For example, suppose the corporation sold 100,000 shares of common stock at $10 par, but was paid $20 per share by the buyer. The result of the balance sheet would initiate left side cash $2 million, 100,000 shares at $20. Right side stored stated value of the common stock plus $1 million, 100,000 shares plus 100. Securely that does not balance. We have the current surplus of $1 million result, and we get a total of $2 million. Now we complete our balance sheet, adding stockholders' equity net worth section. And it looks like this. Total assets and liabilities 11.6. Total liabilities, stockholder equity 11.6. Financial testing using balance sheet. Either the completed balance sheet with the now put the coordinated corporation. Some tests either to show the sufficient strength with warrant investment consideration. Net worth capitalism. Amount of the current assets exceed with the current liabilities. If it tells the amount of the corporation would have were likely to invent that all the items that could be converted into cash in 1 year. Current assets were in fact converted to that. All items paid in 1 year. Current liabilities were in fact paid down. The formula net worth capital equal to current assets minus current liabilities or balance sheet with the net worth capability of Acme is $4.5 million. Current ratio, they show that shows the ratio of current assets with current liabilities, and all computation ratio of solution in this game is divided. For example, the ratio A and B determined dividing A by B. The answer expressed as X to 1 ratio of the 3.7 to 1 or 8.85 to 1 or 1 or 9 or 9 to 1 or so on. The manufacturer company the standard size of the current ratio should be at least 2 to 1 formula. Current ratio of current assets plus current liabilities. Divided by current liabilities and quick assets. Take consideration early statement that although inventory is large current assets, they may not be possible to liquidate quickly in the event of emergency. Therefore, do not consider the determination fair. And quick assets equal current assets over the minus inventories. Quick assets of $5 million. $8 million current assets minus $3 million inventories. Net quick assets are there. Same in the net working capital except for the calculations that eliminate the inventory. Current access inventory minus current liabilities. Quick asset ratio. This is called the asset test ratio. Although as with other ratios, we know the answer will be the result of the division ratio, similar to the current ratio, beginning element of the inventory formula. And quick asset ratio, asset test ratio equal to current assets minus inventory divided by current liabilities. The result would be 1.4 to 3, 1, again, safely a minimum quick asset ratio. Manufacturer companies which set it 1 to 1. Net tangible asset values per share, the commonly called the book value, tells you how many dollars of the net tangible asset stock or assets stand behind each of the outstanding shares of the corporation common stock. It does not show the true value of the share of the probable value of the event of liquidation, but just the amount of the muscle and formula asset dollars that they work for each other. The formula is book value equals balance sheet value of the common minus 10 tangible assets divided by the number of issues and outstanding common shares. Be careful when determining balance sheet value of the common, not overlook the retained earnings. Certain capital surplus should be shown. They are stated earlier in part of the common stock shareholders' equity. Their balance sheet value is common. Capitalization ratio, but designed to show the ratio of the one part of the company capitalization, total capitalization. Note the capitalization corporation includes long-term debt, preferred stock with the common stock value of the short-term debt securities, those that due within 1 year are not included with the calculation for the balance sheet. With our total capitalization of $8.1 million broken into the consist $2 million long-term, $1 million preferred stock, 5.1 common stock includes retained earnings and capital surplus. Capitalization ratio, any of the corporation capitalization will simply divide the value of the total value of the ratio member. For example, capitalization for the long-term debt, long-term capitalization ratio preferred stock, capitalization ratio common stock. Why 1 inch of the capitalization ratio that might be added with the determinant of the corporation type of the capitalization suitable for particular investors' need. The conservative capitalization is one with little or no debt. Interest on debt is an obligation of the corporation only with a small amount could write them when the bad earnings or period more comfortably. Dividends on the stock, both common and preferred, could be cut and eliminated under the earning pictures and improve the heavy debt obligation when the corporation would face greater problems with lean periods. On the other hand, leverage capitalization has a larger than usual amount of debt. Investors type of the company feels with the period of the rising earnings of the interest of the debt, but does not increase along with the increased earnings to reflect dramatically on the proportionately smaller amount of common stock. But the danger, of course, is that the poor earnings period, the interest of the debt must be paid with the card could cause a short drop in the earnings per share of the common stock. Income retained earnings statement. You can put Acme Furniture manufacturer with no further in financial testing. First looking with a statement of income of the retained earnings that will describe the apply with the additional formula. Income of the retained earnings statement that should result of the period of operation for the period for the corporation on the basic components amounts received by the corporation from the sale of the good investments, other sources of the amount used, paid out as expense of the such sales, administrate the cost, tax, interest, depreciate the dividends, and so on. The amount with the retained end of the period covered, well known as the bottom line, but most publicly held companies report the information on both quarterly and annual basis and carefully study the change of the valuable tool. Investment professionals. No sales representing the gross sales less than any items returned with a discount granted. We subtract the cost of sale of the expense required for the produce the sale of the result of figuring the operating income, the amount left over the other sales after expense able to show the result of the operation period business for the time period covered. We would now add any other further income received during the period of given of the total income on our sample statement of dividend invest income that represent the interest of the dividends, security bank accounts owned by the corporation, then other items with non-recurring extraordinary, which we'll address at a later point. Next, we deduct federal taxes, local taxes should apply. We use the arbitrary amount of $2 million, which is at 37% of the total income. The deduction of the taxes, we arrive at the net income of $34 million. Next, income and the income of the corporation after all the items required to be paid for the payment the remains of the corporation rewarded stock with the dividend payments to add with the retained earnings for the future further use of the corporate affair with the preferred dividends paid first. This one reason is called preferred. After deducting it, we arrive at the net earnings. Our final item of the payment is dividend to the common stockholders. We treat it as we have a good year. Let's pay with $10 per share after the payment who remains retained earnings year. Retained earnings of the year added from the previous years arrived at the total retained earnings plus no the defined profit for the year. In some years, we may lose money, but the corporation might elect to pay dividends on their shareholders previous year's retained earnings. Now that we have our income statement put together, let's continue our test of the corporation. Our financial test using statement of income and rating and earnings operating marginal profit show the percentage each sales dollar of the company rated after expense of the measure of the efficiency of the management operating business. The formula is our margin is 25% of $5 million operating expense divided by the net sale. The operating ratio show the opposite operating margin profit. The detail of the ratio expense with the net sales, for example. Operating ratio equals cost of sales expense divided by net sales cash flow. It takes the consideration most interesting aspect of the depreciation, depletion, and amortization called the no cash charge, meaning that although we deduct for the prior of the paying taxes, we do not in fact expend any of the cash on them. Therefore, our net income does not reflect the net true amount of the cash available to us until we add back non-cash items. One of the statement that shown that the depreciation, the depletion, and amortization would also be added as shown as cash flow equal to net income plus non-cash charges. Our cash flow. We asked the cash flow per share would divide by the cash flow by the number of the common shares issued outstanding, given cash flow per share. Earnings per share common are primary basis of this should be divided in the net earnings of the number of shares of the stock issued outstanding. Those show how much of the earning power stands behind each share of stock formula. Primary earning per share with the net earnings divided by the number of shares issued outstanding. Should we show primary earnings share of 33.2 or $33.32 million net earnings divided by 100,000 shares off corporation have income a year that cannot be expected to pay every year. Such items, sale of factory tax rebate, profit of sale of securities are called extraordinary, non-recurring items. They included in our computation primary earnings per share. However, they were to leave with the computed earnings per share excluding non-recurring items. These items could have resulted in profit or loss of the corporation, therefore eliminating could either increase or decrease the earnings. Please note that although the profit on the sales of securities is considered a non-recurring item, the investment income and the deemed the usual they expected not deducted excluding extraordinary amounts. Third method of the computing earnings per share of the common known as fully diluted earnings. They recognize existing convertible security for the corporation capitalization. Should they be converted into the common stock by owners, it would result in an additional share of the common outstanding lower earnings per share. For example, suppose 1,000 shares preferred stock of the Acme Furniture Manufacturer Corp. was convertible into common shares for share base version of added 100,000 shares to the common, making the total outstanding 200,000 shares. Of course, one of the preferred converted that would no further payment of the dividend of the share of the net earnings. Therefore, increased amounts of preferred dividend net earnings would be new $3.4 million. Would now divide number of 200,000 shares common, giving usually fully diluted at $17 per share. Price-earning ratio of the relation between the earnings per share of common and the market price of the share of the comparing ratio of the company's similar industries. One might discover securities that appeared on the line, out of line with the competitors of the market price basis. For example, it would take Acme common stock was trading at $160 per share. We could readily compute the price-earning ratio. The price-earning ratio. Price minus earning ratio equals market price of common divided by earnings per share common. Dividing payout ratio tells us the portion of money is available to dividend payments for the common stockholders were actually paid out with the formula. Dividend payout ratio equals common dividend divided by the amount available to dividends. Acme had a dividend payout ratio of 0.30 to 1. Growth companies tended to pay out with a small portion of earnings dividends, preferably retaining earnings enhancement and growth. The earning increase the percentage payment remaining the same as the dollar payment. It may increase sharply. Publicly, utilities, on the other hand, tend to be a large portion of the earnings and to shareholders and forms of dividends. So-called defense securities will provide greater current yield than would growth company shares. Inventory turnover, the show of the record movement of the company investors. The manufacturing company should make the turnover between 5 to 6 times each year, but the small turnover may indicate that the too large inventory when compared with the company's net sale. The formula inventory turnover equals net sales divided by the year-end inventory collection ratio and enables to determine the speed with which the corporation customers pay the bill. The would finally no merit companies show huge sales but had very slow clientele, with the firm would have severe expense in the care of scaring with a receipt with little cash coming in. Alright, first we determine that the 1 day's average sale of the dividing in a net sale by 365 of the reaching resulting figure to dividing the accounts receivable shown with the number of the days the sale of the outstanding point of the average number of days required for the account to pay the bill. For example, current collection ratio equals accounts receivable divided by the net sales divided by net 365. While many other tests may be used to evaluate financial condition of the corporation, the ones that use the basic formulas were listed again last page for the section of the review. Depreciation. We state that the depreciation is the writing down of the value of the fixed asset amount of the depreciation each of the pre-tax deduction of the corporation income statement. Thus, the corporation save the percentage of the amount that would normally be paid with the tax of the corporation maximum bracket would therefore relate with the large tax saving the depletion. Other non-cash charges are also eligible to treatment. There are 3 main methods of the corporation may employ with determining each year of the depreciation. Straight line depreciation. Straight line depreciation writes off the equal amounts of each year. Let's say the corporation purchased the machine cost $50,000. The machine with the estimated useful life of 10 years. At the end of the 2 years, we have told that have the salvage of $5,000 per half. The scrap metal will compete with the depreciation straight line method. We would subtract the salvage value of $50,000 cost of the dividend resulting figure of the number of years useful life. Each year of the 10 years would take the $4,500 deduction income statement to saving the tax would normally have been paid in the amount. Remember that this is a non-cash driver. The deduction did not require actual spending of the money. Accelerated method. Other methods of the depreciation are called the accelerated method. Although they result in the same amount of deduction in 10 years, they allow for the greater deductions. Early years, the later years, the corporation would choose that is only these with the desire to save with more of the taxes immediately. With then later years, assist with the new acquisition fixed asset with a double decline balance at accelerated decline. Accelerated method would not consider the salvage value, beginning trading with the entire cost as though they were a straight line method. $550,000 cost dividend, 10 years, $5,000. $5,000 expressed in percentage of the cost as 10% with double the percentage, 20% would apply with each year with the decreasing. And we continue until the end of the 10 year of the depreciated machine is unto $5,000 salvage. We can never depreciate below the salvage value. Some of the year's digits. Here again, second accelerated method. Some of the year's digits are SOID, determined with the amount of the depreciation fraction salvage value of the cost when the multiplying each year of the fraction denominator, which is found and adding the digits of the year of the life of the machine. In this case, at this point, we found that part of the formula $45,000 times question mark 55. Numerator, we start with the number representing last year of the depreciation schedule. In case in 10, each year they move back 1 year as follows. We continue until the end of the 10th year. We have year 10 minus $45,000 times 1/55 or $818 depreciation. The depreciation with a total value of $45,000. Other methods we have with greater deduction, early very little end. Difference method can be sharply used. Very first method to end the examples each other. At the end of the result of the depreciation, $45,000 in total. Only the methods differ or corporation choose that one suits is best. Valuation inventory with the method of the corporation value of the inventory can sharply affect the reported earnings. For example, the above the Acme furniture manufacturer produces a small table that one time when it cost $8 to manufacture, price that rose to did cost of 9 to 10 and now 11. The cost of it now rose. Acme course raised its price. Originally may have sold the table for 14, but now charges 18. When they sell the table at 18, what do they use their cost? They might simply average the cost of the inventory with the figure 9.5 for each sale of 8, 9, 10, 10 11, 30, divided by 38 times 4, $9.50 average. They might, however, use first in first out method, meaning the oldest inventory used against the sale of the hence that our sale of the $18 would be applied against our oldest first inventory $8, giving us profit of $10 per table. Periods of rising prices of the first in, first out results higher profits but also higher taxes. More conservative method of inventory evaluation last in, first out method. However, the supply of the implied against our recent last inventory of $11 less the sale of the table at $18 produces a profit of 7, which results in less profit, less taxability for the corporation that year. Corporation may use whichever method finds the best, may even choose the change method. The conditions warrant. On the following pages, we show the balance sheet with the statement of income, retained earnings we created earlier in this section. Alright, financial statement of formula is net current working capital is equal to current asset minus current liabilities. Current ratio is equal to current assets plus current liabilities. Quick asset is equal to current assets minus inventories. Network quick asset equals current assets minus inventories minus current liabilities. Quick asset ratio asset test ratio equals current assets minus inventories divided by current liabilities. Net tangible asset value per share or book value equals balance sheet value common minus intangible assets divided by the number of common shares issued outstanding. 7, capitalization ratio, long-term debt equals long-term debt, total capitalization. B, preferred stock equals value preferred divided by total capitalization. Common stock value of common divided by total capitalization. Operation marginal profit operation marginal profit equals operating income divided by net sales. Operation ratio equals cost sales expenses divided by net sales. 10, cash flow equals net income plus non-cash charges. Earning per share of common, per shares of common equals net earnings divided by the number of shares issued outstanding. 12, price to earning ratios equals market price common divided by earning per shares of common. 13, divided payout ratio equals common the dividend divided by the amount available to dividends. 14, inventory turnover equals net sales divided by year-end inventory. Current ratio equals accounts receivable divided by net sales divided by 365. Alright, your technical analysis. The art of technical analysis study of the past price of the movement, the volume of the trends, through knowledge of the elements of protection they find. They can read the future strength of the weakness of the market general and particular securities. Technical assistants do not rely on earnings, dividend partners of the fundamental analysis. Do not rely on earnings, dividend payment, fundamental analysis, since the field of the reflective of the price movement of the volume chain. The technical assistant broke down 3 basic areas: averages, index market theories, and stories. Study of the chart patterns. We will look into these areas briefly and study with a technical assistant would fill many volumes. Average index is Dow Jones. Average 4 averages comply with the Dow Jones continuous base of 30 industrial stocks, 20 transportation stocks, 15 utility stocks, 65 stocks, a composite of 3 above. All the Dow averages are share weighted to allow the stock split when stock dividends paid by the corporations over the year of the movement. At one point with a company with 300 million shares outstanding will have more effectively average the same chain with a company having 100 million shares outstanding. The Dow Jones industrial average of 30 stocks is the most common often cited gauge for the market movement. Once over the market is down 3 points, one is referring to a 3-point drop in the DIJ Dow Jones Index average. In fact, one of the point of the Dow Jones Industrial representative of the chain, about 5 cents the price of the representative share, though it contains less components than barometers that show the price movement with remarkable similarity to the broader indicators. Standard Poor's Complete and Composite Index. Standard Poor's Composite Index, U.S. 500 stocks represent all major sectors of the economy and contains 400 industrial, 20 in transportation, 40 utilities, 40 financial companies. Each 4 components are purchased separately with a given insight of the movements of a specific area. The S&P indexes are weighted just as Dow Jones average given in the consolidated number of shares outstanding in each company. The Standard Poor's Composite Index of 500 uses 500 stocks and called the index. The Dow Jones Industrial is called average. and an average contains a small number of the components which an index uses a large number of the components measured against the base year of the value. Here's a few popular indexes. Wilshire Associates Equity Index. The index brought us all average indexes, marketed weight, representative of the market value, security trade, the New York Stock American, and over-the-counter issues. American Major Market Index, even though the index of the American Stock Exchange composed the stock listed with the New York Stock Exchange 15, which are over the Dow Jones Industrial Average. Value Line Composite Index marks up the 1700 New York Stock Exchange, American Exchange, and over-the-counter indexes watched by the Value Line Investment Survey. Russell 3000 index made up of the largest capitalized U.S. certificates. Russell 2000, 1000, 2000, which most popular three known. Russell 2000 small stock index benchmark stock prices perform small companies. Russell 1000 measure so-called mid-cap stocks. Alright, the New York Stock Exchange Market Index with the New York Stock Index based on all common stock listed in the New York Stock Exchange. This index multiplied with the price of each common stock by the number of the shares outstanding. The weighing result of the company with the larger capitalization have a greater effect on the index than those with the smaller organization. Market theory, style theory. There's a theory that holds in part with the three trends of the market with a measure for the long term with a measure for the overall market direction. The intermediate trend, which is useful for the trading purpose of the day-to-day fluctuation, important only with the day traders. Proper measurement of the long-term trend is most important, can show that the theory asserts of the change of the direction of the market. Should the bull market reverse itself, any of the stocks spared, but the theory is would tend to liquidate all position as an old Wall Street age holds. When those houses burn down, both good and bad people jump out the window. Advanced decline theory. The theory is also called the breadth of the market theory, where the records of the number of stocks go up and compared with the numbers of that go down. Proper measurements of these figures can show the strength of the market, can signal the change of the market direction. Although the general market rising, most individual stocks might be declined. The overall rise will be due to the sharp price increase relative to the small number of the components that could indicate that the market lacks underlying strength, but it may soon experience a decline. Same may be true with the declining market advance. Outnumber of the declining shares again change with the direction, maybe to fourth. Odd lot theory. The theories measure the activity of the odd lot 1 in 99 shares customers. Takes the position of the smaller customer, generally wrong in their trading. The odd lot purchase that exceeds the odd lot sale of the market show the decline. The odd lotter is selling the might be the time because the little guy is usually on the wrong side. As the theory takes the view opposite of the view of the group, sometimes referred to as the contrarian theory. In recent years, percentage trading volumes attributed to the odd lot customers have declined sharply, giving the theory less support than they had in the past. Short interest theory. The cushion theory of the theories is a Cartesian as proposes taking account action opposite of the feeling of the group of investors, in this case short sellers. Increased short sales considered to be the bullish factors for two reasons. First, short sellers at some point must repurchase the shares. Should the market decline, the buying will support the market, thus providing a cushion. Secondly, should the short seller be wrong, the market rise, he will be forced to cover his shorts. The purchase will accelerate the pace of the rising market. Barron's Confidence Index. The Barron's Confidence Index records yield of the high-grade bonds versus low-grade bonds. The yields on the high-grade bonds, of course, be lower. Investors' confidence grow or spread will narrow. In fact, it felt increasing confidence moved to the stock measuring in an ensuing month, causing increase of the value of the equities. Natural widening of the yield shows of waning in confidence, which might later sell off the stock. Chart pattern study with the past performance through the use of the charts provided the insight of the future price with the technician fee with the other among other history things. The history does not repeat itself. That patiently following chart patterns, only one will be rewarded. There are literally thousands of theories utilize the chart. Let's look at the two of them. Support level resistance zones. Let's suppose the recent month stock hold as of $660 share at as low as $35 per share. Current price at $47. Should the stock return to former high at $660, sellers missed it the last time might offer the sale, but the supply of it might be difficult to stock penetrate with the former high. However, the penetration former higher could lead to the further rise of the resistance form. The supply of the stock has been exhausted. On the downside, a drop of $35 a former low should awaken the buyers to security. The buy order will provide support with the level of perhaps preventing further decline, making an attractive purchase. Should the stock however drop below the support level, security should be temporarily avoided. Alright, head and shoulder formations or patterns would look like this. The bearish pattern of the stock rose with a pace of 40 to a high of 60. Left shoulder fell back to 50 and rose new to a high of 80. Retreated again to the neck 50 before rising the left of $60. Right shoulder the second time, and the retreat back to the base of the 40 would indicate that the decline in the stock is still at lower levels. On the other hand, a reverse head and shoulders pattern bullish in the formation when the stock declines but rise base declines lower level and rises again to the base. Another decline ensures the level of the first decline valve with a relative base and penetration base would indicate a significant rise value in the stock line, and in the ratio pattern would look like this. Industrial analysis. The industry of the compromised economy of the United States is classified in three types of defense, growth, and cyclic. Defense industries are those with the least vulnerable economic chain. Companies with defense have those providing goods and services necessary to the consumer. The last thing with the cut out of the person's budget, economic consideration worse than industrial generally cited as most effective defense of the public industry and utility industry. Aside from providing basic necessity, utilities are not subject to competitive factors generally associated with the American way of life, particularly utilities serve the geographical area. There is no need for price cutting to defeat the competition. There is no note with the rate set by the utility composition. Historically, it was reasonable return for the company food industry can also be considered the defense of the consumer would certainly buy bread and meat before buying a new suit of car. Growth industries are the areas when they increase the demand for the public acceptance. More often, the growth industries commit large portion of revenue, research, and development, and consequently, they do not pay large dividends. Shareholder earnings due for the foster continued growth. The rewards are earned for the former market appreciation, growth of the industry, the natural competitiveness, potential product of the area of the demand with the apparent with the new companies attempt to capture share of the market. The competition usually result of the failure of some of the participants. No better example can be found in the computer industry. Early in the history of the industry, with the characterized as many small other new entity, the growth of potential became an over obvious large entity in terms of the picture of the results. So many small companies were forced out of business. Even major suppliers threw in the total, doing the narrowing non-existent profit margins. Such success breeds more success, but also breeds competition. Growth in industry required continued vigilance by investment professionals. Cyclical industries are those most subject to economic changes or cycles. They may be engaged in areas would affect the recession or much luxury item. Basic example, the cyclic industry, automobiles, in addition to being adversely affected by lessening the consumer buying power. U.S. auto sales were in one time severely damaged by foreign competition. Early 1980s, Ford and General Motors saw earnings draw sharp, resulting in a severe dividend reduction. Chrysler barely avoided bankruptcy by 1983. However, the U.S. auto sales were improved. The Chrysler, which traded at $3.50 per share in 1982, traded above $35 per share. Same period for a low of $16.50. High with its 70. General Motors rose to 98 in 1982. Low is $34 to $80 per share. Today's economic conditions, shame of the automotive industry suffers and prospers. The cycle perfect example, according to earnings recession in 1991, the automotive industry again fell on hard times. Or a source of industry statistics, with many statistics due to the financial analysis used by the U.S. government Department of Labor, supply with a monthly figure of the unemployment level of the nation, change with the level of the long periods, provide with the true and the information rewarding overall health of the income, lowering of the number of unemployed could represent the increase of industrial production, more vibrant economy, with the increase of the employment, the detrimental economic growth, the loss of the consumer buying power, drain place of the government supporting necessary social programs. U.S. Department of Commerce reports the gross domestic product quarterly basis, as well as the index of leading indicators each month. Gross domestic products, which show the estimated total value of all the goods services produced in the United States, considered the most accurate indicator of the overall business activities of the nation. And the gross domestic product shows total amount earned by the nation. The index learns to indicate the 10 components ranging from the money supply, stock prices, new business functions, layoff rate, manufacturing industry. Generally, some of the indicators up while the others are down. The total trend of the index is useful. Analyzing the business cycle, the Federal Reserve reports weekly on the monthly supply. The most often quoted is the M1, include the total amount of the currency circulation as well as the value of which depends. Deposit demand, deposits for the commercial bank increase the money supply. Tend to the inflationary could be the led to the Fed of tightening credit and leasing supplies might presage earnings of the credit restriction, generally positive both in sides of the bond market. Alright, and that completes the book. And this was Barron's Stockbroker Exam Series 7, 3rd edition, Michael T. Curley, Joseph A. Walker.